Welcome back. You're watching us here on Chartbusters, and as promised, let's get talking about education. Navneet Education, the company whose books we've grown up reading and studying from, they stand to benefit from the new national education policy. In fact, the last time the management joined us also indicated this as to be the big trigger for them over the next 2 to 3 years. Brokerages believe the same as well. So what could the opportunity be? The street likes it. The stock's at the high point of trade ahead of the opportunity that the management will spell out for us. And we have with us Gnanesh Gala, who is the managing director at the company. Thanks a lot, Mr. Gala, for joining in. Now, the new national education policy has come by. Could you give us a sense of how big it could be? I mean, I'm reading a report which says that from over 400 crores, this your publishing business could jump to 900 crores purely because of this. Is there a possibility?
Yeah, thanks, Neil. New education policy, of course, got implemented in terms of curriculum change in the CBSE segment, not in SSE segment, where our major focus has been. So for SSE, it's going to be implemented from FY25, that is 24-25. And I'm sure the business at Navneet will be benefited a lot. Having said that, last year, though our revenue was 400 crore in publications, but that was again a COVID year. But the number that we will have for FY23 will be in upwards of 650 crore. And from there on, FY25 looks to be very, very promising to reach the number that you said.
Okay, all right. Hi, Mr. Gala. This is Nigel here. Thanks so much for joining in. Just focusing on your publishing segment itself. So 650 crores you end with this year. Next couple of years, you're saying 900 crores is pretty much doable. So that's good news. What about margins in the publishing segment? I know there's a bit of a seasonality that plays out, but what should be the rough margin band we should work at for this segment? And also, have you taken any more price increases? I think you had taken a mid-teens price increase in the publishing segment earlier. Go ahead.
So margins in publishing segment for last several years has been between 33 to 35%, and which we are very confident of maintaining. You are right that our business is seasonal, so quarterly margins really is not the right way to look at it. It will be yearly margins, so we are very confident of. As far as the price revision of our books are concerned, yes, we did took a price revision last year because of higher input cost. Which we believe the higher input cost is not going to be further higher going forward. That's our judgment. And based on that, we are not increasing the book prices for the next year.
All right. And what about the stationery business? Where does that go? And there as well, we saw a big compression in the margins. Of course, again, we'll have to look at it on an annual basis. What's the kind of run rate we can expect from the stationery business in terms of revenue and sustainable margins?
So I agree that margins got impacted last year because of higher input cost. We could not pass on 100% incremental input cost to our final product. We believe going forward, the input costs are not likely to go further up, rather may go down. And therefore, we will be back on the margins that we were able to generate for last several years. And therefore, going forward, even on stationery front, both domestic as well as exports, the margins FY24 may not be as good as the earlier margins that we were enjoying, but thereafter we are very confident of maintaining the same margins that we were.
Could you quantify maintaining the same margins? Is it mid-teens, closer to 20, lower teens? How does that go?
As far as stationery business is concerned, the margins would be around 11-12% going forward. Okay. As far as blended margins for the company is concerned, because stationery business is going a little faster than the publishing business, so our blended margins should be between 20 to 21%.
20 to 21%. All right. What about revenue outlook, sir? For FY24, you have given a fair idea about both the segments. Now, you have given us the blended margins as well. What should revenues look like for FY24 and FY25?
FY24 blended revenue should be in upwards of 1,900 crore.
Okay. And 25?
25, we may add up another 15%.
Okay, another 15% would take the revenue closer to around that 2100 crore mark. You know, on the Edtech business, which is supposed to be a big valuation driver for the space, and we've seen a lot of money chasing this space, at the same time a lot of money getting out of this space as well. It's just all over the place right now as we speak. What kind of financial metrics can you guide for going forward in terms of growth in revenue, reduction in losses, and if there is any value unlocking that you're planning there?
First of all, I should mention here that the usage of technology or digital content in the classroom has been increasing, and therefore Navneet cannot avoid this area or focus on this segment in particular. So we are investing money, time and money in this business. Going forward, of course, we realize that the adoption levels will be not as fast as we were expecting or we saw in pandemic period, but requirement is there. Therefore, Navneet is focusing this area. We have realized that since it is not going to be adopted very fast, we have curtailed certain expenses, and going forward on a yearly basis, though I had guided a little higher, but we will be 50 to 60 crore loss we may incur for FY24.
All right. And what about the value unlocking part? You know, at one point of time, the street was very excited about that K12 acquisition and, you know, the kind of value unlocking that it can be. What's the plan? What is the current stake? If you can just update us, because we're speaking after a while. Do you plan on increasing stake out there? And is there ultimately a plan to unlock some value?
So, first of all, no plan to increase the stake. As far as ownership is concerned, we own around 21% in the company. And the business is doing so well that in a couple of years, maybe next 3 years, many of us, including all shareholders, may have some type of exit plan.
Okay, all right. So next 3 years. Also, I wanted to ask you about your Indian ICA business. You know, that for the first 9 months is a loss, I think, of close to 20 crores. But as we all know, there's a seasonal factor that plays out there as well. Because Q4 is the strongest, where you get 70% of your revenues, roughly. Now, do you break even? If you break even for the year, means that entire 22 crores of losses gets reversed. So will you break even on Indian ICA in FY23 itself?
Yes, we will break even in FY23 itself.
Oh, okay. You will break even there. So that's a big positive. Just wanted to understand with regards to the boards that you cater to. You said the new education policy has come in from CBSE, whereas your prominence is more in SSE. What sort of education board breakup do you have? And are you planning to diversify to the other boards? I mean, IB is gaining a fair amount of traction too these days.
So, first of all, from commercial point of view, IB is a very, very small segment or small market for us to focus on. Our major business has been for last 6 decades in Gujarat and Maharashtra. So we are focusing state board curriculum of Maharashtra and Gujarat, where the new education policy in terms of content revision will happen from FY24-25. And therefore, we will see better traction starting from FY24-25. The curriculum change has started in CBSE curriculum. And there, of course, we also have good exposure now in CBSE segment, all India. So there a couple of changes have already, whatever has been announced has already been implemented at our end. So major revenue, though, still will come from State Board of Maharashtra and Gujarat.
So this 1900 crore and 15% growth guidance that you've given for FY24 and 25 take into account the NELP of Gujarat and Maharashtra, right?
Yes.
Okay. All right. Thank you so much for joining in and giving us all those details. Wish you good luck. And more importantly, from Nigel and me, thank you for ensuring that we studied well through our childhoods.
Absolutely.
So we used to, read through the Navneet Reader's Digest and exam guides, etc. as well.
Obviously, we're a little bit old fogies now, but at that point of time, the Edtech and the likes weren't there. Yes, thanks so much, Mr. Gala, for stopping by, giving us, a take on your business and the path ahead as well. And as Mangalam said, thanks a lot personally as well. Well, the stock actually, as we